Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. I hope you've all had a fantastic morning so far. Today, we're going to be diving into a cryptocurrency market update. We're going to be taking a look at a number of interesting things actually taking place within the realms of crypto, and also venturing outside of that realm into the traditional financial world, as we know we are so tethered to it. Markets, finance across the world right now is very jittery. Things due to things like the new variant and how this may impact the economy and finance and the world, really. And there's a bit of a stalling. People are kind of on the sidelines waiting to see what direction this goes in. We're also going to be going over again some of Jerome Powell's statements that he made yesterday. He also made some more statements today. Also talking about the European Central Bank, as they essentially are going to have to follow suit with what Jerome Powell said. Essentially, America is where everybody looks to for answers and direction because they're the most powerful economy in the world, certainly for now. And most countries hold dollar debt. Most countries have a reserve dollar currency and kind of stick to that standard. So that's why America is so important. And what America really say has an echoing effect throughout Europe, throughout Asia, etc., etc. Also going into the fact that it does look like we are seeing cryptocurrency regulations start to ramp up, and we're seeing people like Morgan Stanley sees crypto banking regulations arriving faster than expected. Fidelity have gone ahead, instead of launching an ETF, a spot ETF in the US, they've just gone and bypassed them and gone to Canada because they're taking so long. We know that the US, the SEC actually will not release an ETF. The reason for this is because they have so many other markets to consider that may get negatively impacted by a Bitcoin ETF. Also, China are definitely going to ban the metaverse. I mean, they banned everything else. It's very logical. So let's get into it, guys. Markets are slumpy. They went up yesterday and back down. It's very boring markets right now. And this is really due to the uncertainty throughout not just the crypto space, but markets as a whole. If we take a look at Bitcoin, it came down yesterday when we were in the red. This candle over here, the daily was red, and we said, look, you're likely to go up, and that was due to how the FTSE and crude oil opened. And what essentially took place yesterday, these are daily candles, guys. We'll start with the FTSE, is the FTSE opened well yesterday and then saw a sell-off towards the end of the day, which is why this candle turned red. It started green, turned red. Bitcoin, Ethereum, Cardano all followed suit yesterday with the FTSE going up and oil going up. And then what happened, also the S&P when it opened actually went up before then getting rejected. And you can see this is where the S&P, the American markets actually haven't opened yet. So this candle went right the way up to here. It looked very, very positive, very strong to start, and it followed suit with the FTSE and oil, and then it sold right off. And this, of course, has caused crypto to do the same. And, Bitcoin, Ethereum, Cardano, crypto as a whole has obviously followed suit with that. We're so correlated. This is why we're making these videos. I don't know too many other YouTubers that do cross-market analysis. I was going to go into gold and silver with you, but I think I'm going to make a longer video in relation to the correlations between these and crypto and whether there is even a correlation there. And they're in this kind of basket category of anti-fiats and hedges, if you will, against fiats. But gold and silver are very interesting. They're kind of their own market in many respects. So we'll stick to this for now as I feel like it's quite a lot, certainly for people getting that. So what am I expecting today? Just like yesterday, we're seeing the FTSE uptick. We're seeing oil uptick. Expect when the S&P opens, it to also follow suit with how the FTSE and oil have kind of led. It is very weak for oil, by the way. So you could still get another slam down. Now, if these markets continue to go up, crypto is going to follow, just like it did yesterday and just like it followed it also to the downside when we sold off. If these markets go down, crypto is going to follow. And that's because these markets are so tethered to the kind of global financial landscape and global financial global events. So these are things to really, really pay attention to. I'm expecting, given how the FTSE's opened, not as strong as yesterday, but it may hold and not actually go into a red candle on the daily. The oil's really, really weak at the moment. But what I am expecting, typically when you get this kind of a... with your EMAs, typically, I mean, they're not the best indicators in the world, but they are kind of a tool to use in your arsenal. When you get so overextended from your EMA, where you are down here, it's often matched with a visit. Can you see this? Every time, and it works to the upside, overextended, you come down. You can see every time you kind of run away from it, you will come back to it. So I am expecting oil to gain a little bit of strength. When that is, I don't know. There's still so much uncertainty taking place within markets. So now we've got the markets out the way, let's get into some of the news articles floating around, because there's a few interesting ones. I want to start with this one. We spoke yesterday about Jerome Powell. We actually watched the whole 2.5 hours of the hearing. And Jerome Powell essentially said, look, he's going to have to start tapering inflation. Inflation's no longer transitory, which we all knew. It's here to stay. And that he's going to have to potentially up interest rates. Trade a brace for Jerome Powell's next move after taper shock. An unexpected pivot from the Federal. Unexpected. I mean, who writes these articles? Pivot from the Federal. Well, we know he's right here. Federal Reserve Chairman creates fear that a rate rise and tapering will send shockwaves through the US economy. Undoubtedly, it will. We've explained why this is. If you think about companies, a lot of companies will actually borrow money, debt, because of the kind of interest rates to buy up their own stocks and to play in the market. It's not just companies, traders, people will often leverage debt to play around in the market. If that becomes more expensive, less of it goes on. It's that simple. And you have if they up interest rates, and this is a little side note that I would like to cover on another video. What effect does that have on the US? If the US government or the US Fed decide to up interest rates, this affects the entire world due to a lot of the emerging markets, a lot of the other countries within the world having dollar debt, and that debt becomes more expensive to service. So they're in a bit of a limbo. They're in this kind of game where they can't, they can, but they can't because it has negative repercussions, but they might. So it's all very uncertain. And you're seeing this. One key takeaway with this is look how kind of stagnant markets are. I mean, this is the kind of price action that we've had over the 3 days. Huge indecision. Obviously, also very high beta. So we'll focus on Bitcoin. If you look at the indecision within this, it's just screaming indecision. Oil has its own kind of things going on. So remember, all these markets that we're looking at are independent in many ways. They're affected by different factors, but they're all correlated in the sense that they're part of this huge financial industry. So this was Jerome Powell. Now, of course, the ECB, European Central Bank, faces calls to be clearer on inflation after Fed's Powell drops transitory. The European Central Bank is still using transitory. Certainly, Christine Lagarde is still kind of brushing inflation under the carpet. But with Jerome Powell saying this, other being the kind of guiding light, if you will, in the financial realm, other markets, other central banks and countries are going to have to follow suit. So it does look, it's very funny here how where these guys had kind of put the inflation rates. And you can see they're saying now, data released Tuesday shows inflation reached a historical high in the 19 member block at 4.9% in November. The ECB's policy is working towards inflation of 2% over the medium term. Ignore the inflation rates, the CPIs that they give you. They are completely manipulated and untrue. They have a mathematical formula for calculating them that really they'll leave certain data out and add certain data that they want to and manipulate the whole thing. Inflation is a lot higher than 4.9%. You can't print nearly half of the money supply, and not Europe necessarily, but America, or a fifth of the dollars in circulation, and expect there to be any kind of a small inflation rate. It doesn't work like that. If you think about it, your money's become less valuable due to it becoming less scarce. This is the whole kind of concept behind it. So Morgan Stanley is also saying they're seeing crypto banking regulations arriving faster than expected. With Fidelity, which is I think $4 trillion they've got under management, have actually gone and just completely boycotted America because they won't approve an ETF and gone over to Canada. And Grayscale is pretty angry at the SEC, saying there's no basis to approve a Bitcoin futures ETF and not a spot ETF. And they're absolutely right, but the SEC can't just go ahead and start approving a Bitcoin spot ETF Because what effect does this have on Bitcoin gold, gold ETFs and the other ETFs out there? People are going to sort of ditch them and go to a faster horse that's going to make them more money and serve them better in the long term, potentially, as it's such a new thing. So there's reason for everything that's going on. Lastly, and this is an interesting one, China proposed supervision for NFTs and metaverse. They will 100% not allow the metaverse in China unless it's their own controlled metaverse. The metaverse as we know it, I should say, they will not allow in China, because how can they? I mean, they've banned, Google doesn't exist in China. Many people are still shocked when I tell them that, but so many things do not exist within China. Facebook, all these things, and I think probably it's a good thing that Facebook doesn't exist within China, but they're they're control freaks with what they allow and don't allow, because that's just China. I don't really know what else to say on that. So as a whole, quick summary, guys, markets are very jittery, very lackluster. I am expecting us to follow how the FTSE and oil opened. S&P hasn't actually opened yet, but I'm expecting an uptick within this due to how these two have opened, just like yesterday. It doesn't have to, but whatever the traditional financial round does, expect that to be echoed over into the crypto space, because we are very tethered now. We have some of the same actors. So if things seem to continue ticking upwards, just like yesterday, crypto will follow. If it comes down, crypto is also going to follow, because we're part of this kind of macro economic game now. We're going to be doing a lot of looking into cycles. This was supposed to be a 4-year cycle, which saw this huge blow off top towards the end of the year. That doesn't look like it's going to be the case now. We still could get a run. But we're going to be analysing how the future looks for crypto here on out. It's different. The whole game has changed because of where we are and how mature we became as a market. You can't apply the same rules that were present in 2017 to the market that we're currently in. It's a completely different game, completely different environment, etc., etc. So we are going to be doing a lot of analysis on that. So stay tuned for that. I think I'm going to leave you to that. I think I'm going to love and leave you on that note, guys. If you've enjoyed the content, like is always appreciated. So is a comment, and I look forward to seeing you all in the next YouTube video. Thank you very much for watching, ladies and gentlemen.